What's up? I'm Dan Fredenberg, and this is another chance encounter.
Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon.
I understand that there are power lines that are getting kind of close.
What's up again? This is Dan Fredenberg, and that there is a commercial real estate building.
I'm joined today with Christopher Borden. How you doing today, Christopher?
I'm doing absolutely wonderful. Thank you for having me on this.
Oh, it's just my pleasure. And I don't know if you know this, but my very favorite audience member is watching today as well. And Christopher, I'll tell you why my favorite audience member is watching. It's because we interview commercial real estate investors on here because it's chance encounters. And part of the reason why we do that is because you have to find out what the overlap is with people in your industry. There's another part where it's basically the law, which is you're not allowed to share your private deals with other people until you have a substantive relationship, which means you have to know like what they're all about. Like what are they actually doing? How sophisticated are they? What's their appetite for risk and whatnot? But before we bore you to tears on stuff like that, Christopher, can you introduce yourself to the audience real quick?
Yeah, hi. My name's Christopher Borden. I'm very new to the commercial real estate space. Been doing it for roughly about a year now. We primarily concentrate on the capital raise aspect of the deals. So we're into deal number 7 on our syndication, and it's just been an absolute wonderful ride thus far.
All right, beautiful. So the next thing I have, it's actually for the audience, and it says, "But wait, I'm gonna go over here. Check your eight. Your eight's down there on a clock. Well, the audience for you, it's your five. But for can you see the audience's screen and see if they've got that awful red button or if they have the gray one? Like, do you think the audience are they subscribed? Can you see that from where you're sitting, or can you make it out? Just kidding. All right, let's get moving here. So make sure you subscribe. Anyway, so the first thing I go through here are the 5 different distinct motivations among commercial real estate investors. If I do this, then you can see the screen at the same time and you get to see that other thing there. So let's go through these 5 different distinct motivations. The first one is not mine. It's preservation of purchasing power. And what that's all about is that some people, they have the portfolio, they rely on the income from and cash flow that comes from their investments. And so as a result, sometimes they have to make new acquisitions because inflation will eat away at the purchasing power of the cash flow. But these people who are in this situation, they're not really in a mode of getting rid of a bunch of assets because they realize that that's not the long-term goal. But that's not my one. My one is trading time directly for wealth. And the reason for that is because I got a background in technology. And one of the problems that you run into if your background is in technology is that you're getting high wages, which sounds fantastic, but that also means you're paying more in tax than anybody else. So it hit me as like how do I pivot and make sure that I get that equity multiplier working in my favor and quit selling off all of these all my time for money like a chump. And I'm sitting here adjusting my camera spot and where this goes, and so that's why it looks ridiculous. But anyway, the next one. That is the most common reason why people get into this is because they want to fast track retirement, but more specifically what it means is they want control over their time. So they want to work fewer hours per week or fewer months per year, whatever it is, but that's not everybody. Some people, they are just ambitious. They want to buy their entire hometown. They are looking for that generational wealth to make sure that their great grandchildren never have to hold down a day job. So that's great because they're going to be hustling into their 90s. Just like the last group, as far as distinct motivators, these guys, they've picked a sector of society, or maybe it's animals or the environment, or whatever it is, but they figured out that they have to get a substantial financial nest egg in order to make a really big impact on the people or sector of society that they want to help. So, Christopher, of those 5 different motivations, what combination of those sounds most like you or describes you best?
I think, I mean, I like to diversify as much as possible. So I think on most aspects of it, so we don't only do commercial real estate, just put that out there. We do a multitude of things in investments. I think one of our largest motivators is being able to help individuals. So one of the things that we actually do is we actually will finance property. So I mean, home ownership is a big one for us. Education is a big one for us. Like just being able to give back to society, because at some point in your life, you get to a point where money is not as important as a lot of people make it out to be. Normally it's the point where you've made those right decisions. You've planted your seeds, your trees start to blossom, and you have that passive income, and you have that kind of that wealth factor. And then at some point, it's more of, again, leaving a legacy, leaving something else behind, and contributing more to society than just getting up, doing a 9 to 5, and that be the end of it. So again, we like to give back and help. So we try to help motivate individuals, give them education, and then actually we'll buy a house, hold a note for individuals who can't normally qualify for conventional financing. So I think it's a combination. I mean, I don't know too many people who want to pay taxes.
Yeah.
So having some kind of tax shelters, again, and just strategizing, because again, it's not for us. It's not just, we have single family houses as well. Again, I explained the multifamily capital raise, and even that aspect of it, right? So we're raising capital. We're giving these opportunities to people who might not have otherwise had the opportunity. So I think it's a combination of all of the above, and I'm not gonna balk at it if I get paid for it. So again, it's kind of I think holistically most of the things that you mentioned.
Awesome. Love it. So the next part, it's the tolerance for risk. This is based off of something that the SEC put out, and I wasn't very impressed with how, like, I don't think it really tells you much about the person. They say it's like, oh, so how long have you been investing? What kind of numbers are we talking about? But I don't think that really tells you that much about level of sophistication. So I made up this new test to figure out what your tolerance for risk is, which is a fill in the blank question. There are many popular investment asset classes, but I think blank is too risky. What do you think is too risky, but is still a really common investment asset class there, Christopher?
Yeah, I think the equities market is, especially in the current economic environment that we're in, and I guess that's another reason why real estate is so passionate to me, because I mean, you literally have a physical asset that you can then exchange should something happen. People always need someplace to live. So again, there's the on the equity market side, there's too much volatility, and a lot of it has to do with like consumer sentiment. And you can definitely see that, right? If there's like a news article, or you get Jerome Powell coming on television, and the very next second, the equities markets drop by 600 points. I mean, that kind of tells you there's a lot of volatility there, and there's definitely added risk involved in the equities market.
And the thing that bugs me is they got entire teams of people that their entire job is to spin what's going on into ways to not cause panic or whatnot. And so like it just shows that like there are systems in place to keep you from knowing what's actually going on. So that drives me
Yes,
crazy.
absolutely, absolutely.
But we're talking about commercial real estate now, so let's talk about the 6 different core roles. And if you want to be able to effectively communicate on the subject of commercial real estate, my best way that I can help you is to send you to dandoesdeals.com so you can get your commercial role deal die here with the 6 different core roles on here. And I don't even ask for your email address, which I really should do, because that's like the dumbest thing you can do as far as marketing goes, is not ask for people's information. But again, I want you to go there. I want you to print it out. I want you to show this to your friends and family, and then that way you get to really up your skill level as far as explaining how people fit into these deals. And I'm going to go through all of these just so that you're clear on those. So let's go through all of them. First one is the repositioner. What's up with the repositioner? Well, they're looking at a bunch of different properties and doing a bunch of different paperwork. And what exactly are they doing with that paperwork? Well, the repositioner is an acquisitions person, so that means they're talking to sellers. And then the first thing they're going to do in this paperwork here is they're going to underwrite it, which is a fancy word that just means they're going to do the math. They're going to do the arithmetic. They're going to figure out, first of all, is this property even actually making the amount of money that the seller claims it is? And then the reason why they're called repositioners, some people just call these guys investors, but there's like 3 different sides that people call investors. But what they're up to with these properties when they're looking at them and comparing them is they're saying, how can I reposition it? In other words, how can I make changes to the property and how it's run in order to find more upside? And there are 3 main tools in their tool belt to pull that off. The first one is more advantageous lending. So they find better financiers and then they can get a better deal on the loan. And then that's upside all baked in. But usually the repositioner is going to be relying on the operations team to cut those expenses, stop those Benjamins from going down the toilet. But of course, there's more than just unclogging toilets. There's also collecting rents and mowing lawns and taking out trash and all that kind of fun stuff. But one thing that most people don't think about is there's a marketing component, and that's one of my fortes that I bring to sponsorship teams, which is how do you keep the vacancy rate super duper low? Okay. There's also other things too, as far as automations and others efficiencies, but real estate's hot, so operations is probably not enough. So very often the repositioner will find a contractor team. They'll find the contractors to do a value add, or what other people call renovations, just basically making the units nicer. And the reason for that is so that the next tenant will be happy to pay more than the previous one, and there's your upside. But if the repositioner has one very specific problem that I have as well, which is, I don't know if you know this about me, but I'm from the internet. And so that means I need a local. I need boots on the ground. I need somebody who can be there in an hour or two, because that's not going to be me. I'd still be stuck at the airport. So you need the local, you need the operations, the repositioner, and the contractor. And then when the repositioner turns around to the financiers and says, here's my deal, there's one question that the banks are going to be asking, which is, who's your KP sponsor? And that's the one that they kind of gloss over this in a lot of coaching programs, and it's a little bit of an issue. But what it's all about is, if you want to be eligible for a commercial loan, let's say you're picking up a 350 unit apartment complex, they will not issue a loan to you unless somebody in the fold already owns a similar asset. Okay, so when you're turning around to the financier saying, hey, I need tens of millions of dollars because I'm going to be picking up this property, they're going to want to know who that KP is. And on top of that, they're going to need a certain amount of liquidity. And then throughout the GP team, you need a balance sheet of at least the amount of the loan. But if you got all those pieces, you've got yourself a commercial real estate deal. So Christopher, as far as core competencies go, what are you most likely to contribute to your next deal?
So like I said, for the most part, we do the capital raise aspect of it, sort of the
Financier, right?
Yeah, for the financier portion of it. We do have, so my background, I do have some experience in the asset management side of things as well. Prior to getting into real estate investment, I actually ran a very large retail company back in Hawaii. So it was roughly about $1 billion in revenue a year. So definitely understanding the asset management finance aspect of it. I am actually part of a club here in Utah that collaborates with other commercial real estate investors, and we bring in additional KPs and sponsors, and we go through deals. So all of the deals that normally come into our club, I'll do the underwriting for it as well. And then after the underwriting, make sure that it's a good investment, a good solid investment for our group. We'll kind of go out and advertise it in our group, see if there's any other individuals, commercial real estate investors that are interested. And then if based off of that, we'll go out and then we'll raise capital for the specific deal. And I think for all of the core competencies that you mentioned, I think all of them are important. And at least if you're getting into some kind of investment, I think having some kind of knowledge or understanding of each aspect of it. The biggest thing is understanding. I mean, there's multiple things, but you want to definitely look at the sponsor. The 2 things that are going to make or break it, I guess that will break the deal, will be the sponsor and in this environment, the debt. And you definitely want to understand all of them, but you also want to do some due diligence and understand the background behind the deal, make sure it's in a good market, make sure there's a lot of economic diversity, make sure there's positive net migration. I mean, you want to look at all of these different aspects of it, and make sure that if you're going to invest your hard-earned capital into a deal, that you do your own due diligence, or you're working with someone that is going to do the due diligence for you and you trust wholeheartedly.
Right. Exactly. So I love that because you're mentioning your investor relationship as well as the core competencies that make you that you'll contribute. So that's fantastic. My next question then has to do with ideal properties. Then, so when investors, operators, and whatnot are talking about commercial properties and what's a buy box, is a term that they'll often use. They're really asking about three things. The first one's geography. So which states, which counties, which neighborhoods, okay? That's all going to be super duper important for the reasons that Christopher just mentioned. Second one is going to be the size of the deal. We're talking about multifamily, and multifamily, among a few other commercial real estate asset classes or asset types, they go by unit count to figure out the size. For industrial or warehousing, it'll be square footage. But you need to know that size, because somebody who's focusing on 5 to 10 unit apartment complexes are going to be nothing like running a 350 unit apartment complex. So you need to know that size that the person focuses on, so you know you're getting the best person for that. And then the third one is class, and unfortunately they use the exact same word for two different things. The first one is they're talking about the condition of the building. So that means, is it old and beat up, or is it up to date but not very luxurious, or is it brand new and has all the amenities, all the neat luxuries and all that kind of stuff. That's one version of the word class. The other version has to do with where the property is located, in terms of like, how's the crime rate, what are the school districts like. So that's also a matter of how desirable is it. And both of those two, they rate it off of the same system as grade school, which is like, it'll be like a C minus or like a B plus or an A or something like that. So Christopher, as far as for you, and it sounds like your group of investors, what sort of properties are right in that sweet spot where it's easier to say yes and it's more difficult to say no?
You know what? We like to diversify as much as possible, looking at multiple asset classes, and not even necessarily concentrating on one specific section. So, I mean, obviously, most investors will stay away from Class D properties, but we're not necessarily opposed to a classy. I mean, it's one of the profound statements I hear a lot in real estate, right? You want the worst property in the best neighborhood. So you're looking for that Class C in maybe a Class B or Class A neighborhood. But for us, I mean, we like to look at diversifying, because you're going to take different risk levels depending on the actual asset class, right? So if you're at a value add, say a Class C value add, you're taking on a lot more risk than if you're on a core plus asset. So being able to diversify, because some people are going to want because when you're trying to accommodate a group. So again, we have a larger group of individuals, real estate investors, that come together. When you're trying to accommodate a group, everyone's not just looking for one thing, right? Someone might be at the point of their life where they're okay, they want to take more risk, because again, if you take on more risk, normally the rewards are greater. However, there's other people at there's certain points of their life that they only want cash flow. So different asset classes will offer different things and offer different returns. So again, if you're investing in a core, which again is like brand new, luxurious asset, you're normally not going to have a higher upside, but there's more opportunity for a pretty consistent cash flow. So again, it's kind of understanding who you are in your investing journey, and then being able to accommodate the assets predicated off of that. And then again, we like to, because of especially what we're dealing with today, right? You have the economic cycles, and within these economic cycles, different assets react differently to the downturns or upswings in the economic cycle. So you want to be able to diversify, so you can kind of, for me anyway, that's my aspect of it. So you can capture, you have some risk mitigation when the economy is on a downturn, and then you have a whole bunch of upside when the economy starts to turn around, and you're trying to recoup both aspects of it.
All right, beautiful. And you and I met via some meetups that I always find through LinkedIn. Is LinkedIn the best way to reach you, or is there a website that's better or something?
LinkedIn is probably the best way to reach me, and you can find me at Christopher Borden at just LinkedIn. You can search me.
All right, beautiful, beautiful. And the only thing I have left, it's actually not for you, Christopher. It's actually for you in the audience, which is if you look under, like down under here, you might notice like this searing pain in your through your eye because there's this red button and it's ugly. Like I don't like everybody hates these things. And like honestly, if somebody walks by and sees from behind you, like your computer and sees this big ugly red button, like what are they going to think about you? So of course, so what you really ought to do is click on it and then it turns gray and that won't hurt your eyes at all. And of course, I'm a little bit biased because it means that YouTube might actually start paying for these videos instead of me, which is kind of the point, right? If you enjoy this stuff. But really what that means, all jokes aside, it means that these videos might show up on your list of suggestions, but you can go ahead and ignore those. I just appreciate the fact that you spent the time with me. Just like Christopher, I appreciate you joining me today. This has been great getting to know you a little bit better.
Yes, awesome. Thank you for having me on here, and it's always a pleasure.
Awesome. Thanks.
Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay, are you already logged into 506B me?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506B me, everybody.